Okay, so today I'm just having a look at today's the 28th of Feb. It's Wednesday. I'm just looking at the BHP chart because yesterday I sold some BHP puts because I expected that BHP was going to rise today, which of course it has done. And my reasoning for that was simply this. BHP's in a bit of an uptrend, possibly a little bit of a channel where it's been trading up, down, up, down, up, down, and I expected there was going to be a little bit of a bounce and head back up toward the channel. Whether it does or not, I don't know, but that's my conclusion, my assumption, and at the end of the day, that's all trading is based on your assumptions. None of us have a crystal ball. None of us know what's going to happen next, so we can only make educated guesses. So the bottom line is the put options that I sold yesterday won't be being exercised. They can't be anyway because they are European style options. These are them here, down 21st of March, 44.60. None have been sold or bought today. But they're European style options, which means they can only be exercised at expiry, not any time beforehand. Having said that, I sold these put options because I'd be happy to be exercised. Of course, I'd be happy to own the stock around this price because if my assumptions are correct, this stock could possibly keep rising. So I'm happy to buy it here. So that's why I sold the put option at that price there. So today I'm looking for another trade to take and I have no idea what I'm going to do. Am I going to sell puts? Am I going to sell calls? Let's have a look. So I've got some BHP shares. Well, I don't actually have any shares, BHP shares, because I haven't been assigned. But if I am committed to buy them, then I will have some BHP shares. So I'll look at something else, maybe one of the banks. Let's have a look at Westpac. Okay, that's at an all-time high. That is not a share that I want to buy for that price. And it's been in a falling market. When I say an all-time high, it's actually broken out of a long-term downtrend resistance. It's in a bit of a triangle breakout. Technically, we could say that the distance from here to here could be the new high. We could expect potentially for this to take a nice upward trend to around these prices. Is it going to? I don't know. Not a share that I particularly want to own because I just think there's a lot of people that have been stung on this share, meaning they bought up here and they've been waiting to get their money back and they're not even there yet. People that bought here have been sitting on some very sideways movement. They'd be happy to get out. So it's going to take a lot of horsepower to drive this price up much further. It's been in a long slip. Imagine if you were one of the people that paid close to $40 for this banking stock back in 2015, waiting to get out. First sign of recovery and you're out of there. So I don't want to own this stock. Therefore, I'm not going to sell puts because if I sell puts, it's basically saying, look, you can put this stock to me at this price and if it falls, I have to buy it and I could get stuck with it. If I sell some call options, I'm basically giving someone the right to buy the stock from me, which of course I don't own. So if I wrote some call options around where the price is at the moment, $26.13.5, I'm basically saying, look, if this price goes flying up, you can come and buy the stock off me for $26.13 or whatever the price is of the option. Then I have to obviously go out to the market to buy the shares. Now, this could take a sudden rise and I could potentially get stuck. But then, of course, I could roll the options up or out to a further month or up to a higher price. Let's have a quick look at the options. What are the premiums going for? So I would only look at selling call options and they would be naked because I don't own the stock at the moment. So $26.13. Today is the 28th of Feb, so we'll go out to about March or so, maybe a month out, so around the 21st of Feb. Current price $26.13, so $26. 49 cents. That's not that enticing for me. $26.50. So if I sell one contract of 100, that's only $230. Yeah, nothing too exciting here for me. So I might leave this one. I'll move on to something else. What else have we got? So that's Westpac. Let's look at CommSec, or Commonwealth Bank. $116 per share. Wow, again, we're at the top here. Okay, this is a much healthier stock than Westpac. It's been in an uptrend for a very, very long time, for many, many years. In fact, it's just been going up and up and up. Is it a stock I would like to own? Yeah, absolutely. I would have liked to have owned it back here in 1994 when it was $7. There's the 2008. There's the coronavirus. Yeah, look, this is a much healthier looking stock. Was in a very sideways channel here for a while, where it was just going up, down, up, down, up, down. It's broken out of this resistance just here. So it's looking for new highs, new territory to go to. Where's it going to go? My gut feeling is, initially, it's going to come back down to these levels here. When it meets these levels, it's going to find a fair bit of resistance, I think, because it's met this same level. My lines aren't very straight, are they? About 110. It's met these levels on a few different occasions. So that's a psychological support level now, where the traders are going to want to push it back down to these levels to see if it can sustain it and continue up, which it probably will. So if I was to own this stock, I would like to maybe buy it at about 110. I certainly don't want to be the sucker at the top buying at the top price. So if I can get some good premium for a naked put or a cash secured put at about $110, I'd certainly be a taker of that. Let's have a look. So puts, we're currently 116, 28th of Feb, so I'm going to go out to about March. There's 116 put, because the lefts are our calls, the right are our puts. So a 116 at the money put is $1.34 I could collect. But I want to be down at about 110 because that was the support level. So I need some more strikes further down. There it is there, 110. Ooh, 17 cents. That's not very enticing. Between 17 and 27 cents. Let's have a look at that. This is an American style option, which means that it can be exercised any time between now and expiry. Market capitalization of Commonwealth Bank is $196 billion, so it's certainly a healthy stock. We've just passed the ex-div date of 21st of Feb, so I don't have to worry about a new dividend date coming up and pushing the stock further down. It is a 100 contract size. So if I was to sell this, let's have a look. I would sell to open a CBA J48. Bid 16.5, offers 26.5. Let's just say I put in there I want 0.23.5, hypothetically, and I want one contract. Obviously that's only going to give me $23 after brokerage. I'm left with negative $11, so it's not worth doing. If I did 10 contracts, that's going to give me close to $200, but it also exposes me to having to buy, if I'm exercised, $110,000 worth of shares. Do I want to buy $110,000 worth of shares to make $200? The answer is no. So I'm going to leave this one because it's a very expensive stock, and for a 23-cent option, it's just not worth doing. So in other words, the stock is just too far away from where I would want to own it, because I would want to be owning this stock back at these support and resistance levels here of about $110. So had I been able to identify this market back here a few days ago, yeah, that would have been a viable option, but I didn't, and now I have to, well, I don't have to do anything, but if I wanted to get involved in this market right now, I need to be up at this price, which of course is about $6 or $7 away from where the activity would be. So I could certainly put this one on my watch list as something that I want to come back to. When it does come back and test this market, that might be a good time to sell some puts on it then. So let's look for something else. What about Wesfarmers? Okay, Wesfarmers, same story. Look at this. It's at a high. It's at an all-time high. And I don't like to own stocks at all-time highs. I don't want to be the guy paying the top price. I don't want the certificate on the wall saying, hey, congratulations, Brent, you were the highest bidder and the guy who paid the most amount of money for one stock. I don't want that plaque on the wall. So here, the last high was around these prices here. So that's probably going to get tested again. We've obviously broken out past there. There was a little bit of a struggle around those prices on a couple of days. Can we break it? No, we can't. You sure? No. Can we? No. Can we? Yes. And I think it's going to come back down and test it again. It has to. And if anything, it could potentially come back and test this gap as well. So the price could come down, test to fill in this gap. There was a lot of activity around this area here before. Then there was a bit of a breakaway gap. So this stock, although in a steady uptrend since it took off, I feel is going to A, want to come back and test these areas, and B, want to come back and fill in this gap here. So, could I sell call options on this stock? Yeah, absolutely. And in actual fact, my belief would be it's going to fall in the next few days. So, at 66.70 odd, could I sell a call option? Would it be viable? What did I say? 66.70. We'll go down to about March. 66.70. Call option 15 cents. Forget it. Call option 60. What did I say? 66.70. $67, offer at 59 cents. So, 100 of those is only $59. A couple of hundred of them. It's an American style, which means they can be exercised at any time. Ex-dividend date's been and gone. So that's all good. Market capitalization $75 billion. It's a good stock. It's a very good stock. So if I was to sell to open some call options, I'm basically saying, hey, you can come and sell your, what are we looking at? Wesfarmers. So what am I saying? You can buy Wesfarmers off of me for $67. Now, why is anybody going to do that? They're not right now because they can go straight to the market and buy them cheaper. But if I sell to open one contract at bid off at 59.78 and a half, let's say 77 cents. Let's say I had 5 contracts. Okay, maybe make it 3 contracts. Couple of $100 for 3 contracts. What am I up for? If somebody says, hey, I want to buy these shares for $67 and I have to go to the market and buy them, I mean, obviously it's an unlimited risk on my part if suddenly Wesfarmers goes to the moon. But given that it's at a high at the moment and my expectation is it's coming down, do I want to have to go out and buy 300 Wesfarmers shares at $67 for a price of 67 times 300 for a price of $20,000 or thereabouts? I think it's 20,100. That's what I need. So if this stock goes to $67 or above, I'm going to be exercised and I have to come up with whatever the price is, which could obviously be a lot higher. But you know what? I'm going to take it because my expectation is the market's going to fall. So I click on proceed. I put in my password, submit the order. Yes. Okay, my order's been submitted. And I'll go back to the home page, check my email. Here's my email. They've received the order, which means it's been received, hasn't been executed yet. It's good for a day, which means that if I don't get filled at 77 cents, my order will be cancelled overnight. So we'll just sit and wait and see if somebody takes me up at the 77 cent mark. Manage my orders. These are outstanding orders as opposed to executed orders, and they haven't been executed yet. The ones that have been were the ones I did yesterday on BHP. So I just sit and wait. on my outstanding orders. In the meantime, let's look for another opportunity. What about Rio? Okay, Rio Tinto, it's come down from its high of 136. It's currently at 123. Okay, it's fallen through the support line where it was resistance. In other words, it tested this price, couldn't penetrate it, came down, went up, down, came through, and at this point it broke through there, so this now became the new sort of support level, which it's now broken through. So my gut feeling is potentially it's going to come back and test this area again. Whether it goes through or not, I don't know. You can see why it didn't get past this area. It had tried it before back in July of 21, couldn't get through it, so it's no surprise that when it comes back here again, it says, remember this, we don't go past that level, so that's become a resistance. This should have been support, but wasn't, so where's it going to go next? I mean, potentially it could come back down to these areas here, could come down to here. I mean, that's the floor, essentially. Hasn't been down there for a while, but essentially from this high down to this low is where it could potentially go. So it's kind of in no man's land at the moment. We could potentially say there's a little bit of an uptrend here, and it could come and test these levels and then bounce off. Look, I just don't know. There's nothing too clear for me around here. I could potentially sell a put around this level here, which is about 116 or so, 117.50. Is there any money to be made at 117.50 on a put option? 117, go out a few weeks. 118, there's 76 cents there. Go out to the 14th of March. What are we now? February the 27th. So less than a month. We can say 116. We can get $1. Yeah, that's not bad. I'm going to take that. $116. Let's just double check. Rio Tinto, would I like to own this at $116 on or before the next 4 weeks? Yeah, why not? I think there's a bit of support around here. I like to use the Yahoo Finance as well because this shows me the volume profile, and I like to know where all the volume is traded, and you can see that around about 115, 112-ish, this is where most of the volume gets traded. So I'm pretty confident that at around about 112 to 115 or so, there's going to be a lot of support based on the amount of volume that gets traded at around these levels. You look at this is like an inverted D shape. In other words, this is where most volume gets traded around here. So I expect that there should be support there again if the price falls. So I'm going to take that trade at 116. Where was it? Put options expiring 21st of March, 116. Bearing in mind this stock is $123 stock. This is a European option, which means it can only be exercised at expiry, and it's a 100 contract. So I am going to put to the market to open a put option. I'm going to sell to open at a price of, what's the bid? $4, $39. Let's go $1.26, $1.28. Let's make it. So that's $100. So if I go with 3 options, that's $340, $350. What does that expose me to? If I get exercised, I need to come up with 116 times 3 is 300 is $34,800 worth of stock. Am I happy to do that? Yeah, why not? What if I said 2? Let's go with 2. Just to reduce my exposure a little bit. That means I would need to come up with 116 times 200 is only $23,000, which is less exposure. So I'm going to do that. Yes. It's telling me that it's a European style. Yes, I realize that. Yes, yes, yes. Everything's good. Okay, so that's now been sent to the market. And if that comes through, I'll have another $220. And here's the notification. We've sold to open at $116, 2 contracts, good for day. That's all good. If I manage my orders, they're both outstanding, so neither of them have been executed yet. We'll just wait and see. Okay, so I just did a quick refresh of my outstanding orders screen, and I can see that one of my trades has gone through, which of course is my Rio. So I'll check my emails and trade notification. Notification, we've sold 2 contracts for $116 put option expiring, price $1.28. So they've just collected for me $256. They've taken out brokerage, so I've just been given another $220 into my account. Nice. Just go back to outstanding, display. Okay, West Farmers still hasn't gone to market yet. I'm still waiting for a taker to come and take me at 77 cents. So we'll wait and see if that one goes through. Okay, so I've just come back to have another quick look. It is now, what time did I execute this order? I put the order to market, it was 1:51, which is basically, I'm in Western Australia, so that's 10:51. It's now 11:30. So it's well over half an hour it's been sitting here. I'll just refresh it. Still hasn't gone to the market. So what I'm actually going to cancel this one. I'm not sure if you can hear that noise in the background. That's the water running. My wife's in the shower. It's 11:30 WA time. We're just about to go out for lunch for an hour or two. And I just don't really want to go to lunch having this order sitting in the market, not knowing what's going to happen with it. So I'm just going to cancel that one. I'm happy that I got my Rio position open today. I collected a couple of $100 on that, so I'm happy with that. I'm going to go to lunch. So I want to cancel this order that's sitting in limbo. Quick refresh. Still there. I'm going to cancel the sell to open the call options. Just because it's a naked call option as well, I'm just not happy to leave that sitting in the market. I mean, anything could happen. West Farmers could suddenly skyrocket. I'm left in an open position where I have to buy the shares to deliver them to the person who could take me on this option. It's just not an open position I want to leave while I'm away for a couple of hours, so I'm going to cancel that order. Just to make sure I have no outstanding orders, I just have my 2 open orders, which of course is Rio from today and BHP from yesterday.